Hey everyone, Steve here from 11ish. A lot of you have been asking me for a follow-up video on the GNUS brand investment opportunity. First and foremost, I still hold on to my GNUS investment. As speculative investment opportunities go, where it's high risk, high reward, I put about 10 G's into my investment opportunities. But please keep in mind this is relative to the size of my bankroll, so please don't put all your working capital into high risk investment opportunities. That's just unsound investment in general. Now with the disclaimer out of the way, in this video I'm going to tell you why GNUS brand is still my favorite penny stock investment opportunity. Now, if this is the type of content you've been looking for, please hit that like button and let's get started. To put it simply, GNUS brand is a children's content producer that embeds messaging like ethics and morals, financial literacy, and they do this with decades of accumulated industry experience, star power, and mass distribution. For those that are new to the GNUS brand, the leadership team has basically created thousands of content on the established networks, and now they are creating their own unique content based on award-winning books. They're leveraging celebrities like Jessica Alba, Arnold Schwarzenegger, and Warren Buffett to create voiceovers, and they're creating content that has been distributed on all of the major streaming distribution channels, even all the way to CCTV. At the same time, they're buying even more IPs from Marvel. They bought a bunch of episodes from Yu-Gi-Oh!, which I grew up with. I don't know about you guys. And all of this creates the idea that they want to continue to create distribution with unique content every single year. And I think that is the right play, because they're basically copying what Netflix has done really, really well for adults and making that available as children's content. It is also incredibly important for them to have an experienced team when the team is so small and they're in basically startup mode, right? You need people who's done it. You need people who's created success to create you nothing into something. And you want to make sure that something is great. And this is why you get experienced people who were head writers for SpongeBob or the producer for a shit ton of Batman episodes. In this day and age where we are all overwhelmed by content and entertainment, it becomes even more important for a legitimate brand to create unique content, but also quality content. And this, in my opinion, is the reason why they've hired so much expensive star power to create this unique content roadmap that's going to be executed for the years to come. That is very, very important to me, and I think they're doing a great job. Now let's talk about the elephant in the room. Since I started talking about this stock, the stock price was $3. I told everyone to sell when it was tripled because there was absolutely no reason for that stock to be 3 times the value of when I was talking about it. Now the stock price is down to about $1. I think it's creating a new investment opportunity, and even the skeptics, the professionals that were actually proactively shorting GNUS brand, said the stock price is supposed to be $1 to $1.50. Now it's that, and now it's about execution. It's about whether GNUS brand is able to create value, which is why I said everyone should be investing in this stock in the first place, because there is no short-term play here. Their roadmap involves creating content distributed on Amazon in early next year. All of this needs lead time to create value. People have to take into consideration that you're not investing into Amazon. If Amazon said that they were going to tackle a new vertical, the stock price is very likely to go up that day because people assume success on that day because they have a proven track record. But when you're talking about a company where they're still trying to create value, where they're essentially in this unvetted state, which GNUS brand is, even though the cards are stacked in GNUS's favor, with the right leadership who's done it before, you have the star power who's creating the content and doing the voiceovers and the mass distribution channel so that it can be shown everywhere to get the maximum number of eyeballs. And now they're distributing content through Walmart so that you can have physical toys to be sold as well. All of this makes a great strategic roadmap for a brand, for a business like this. But none of this is proven in terms of successful execution yet. It's essentially laying out the groundwork to maximize the chance for success, right? That's how a startup works. So therefore, we have to see how the numbers play out quarter over quarter, making sure that the growth makes sense. It currently makes sense, but it's still not explosive growth yet, right? I'm waiting for early next year see how it plays on Amazon. I'm waiting for all of their new IPs, how they're going to distribute that content, How are they received? All of this stuff generates value. Them acquiring it doesn't really generate any value yet. I hope everyone is on the same page in this front because this is very, very important. So this is the investment angle I want to point out to you guys. Most retail investors, they look at a stock and they think that they're investing in a brand, as opposed to they're investing in a working business who is using the capital that's generated from the stocks to create business value. And this is also why they diluted the stock, right? I mean, you tell me, if your stock price jumped up in a super, super unexpected way in multiples of what you think it's currently worth, would you not leverage this opportunity to create money, working capital, so that you can create more value for your business? Because ultimately, we're talking about the lifetime of the business, creating value for the lifetime of the business, not creating value for the next 2 weeks. A lot of retail investors are just looking at how am I going to make money in the next week, right? And that is not how business works. This is not why businesses go IPO. So yes, I think it was a dick move for them to sell so many shares in such a short amount of time that they're now debt-free with $50 million of working capital. I think that is 100% a dick move. But the guy's trying to run a business here, so I can't blame him. And also, I am looking at this as a long-term investment opportunity. The business value makes sense. I think they're fitting a market gap that doesn't exist. I mean, especially when I care about financial literacy, and this is the only channel I know of that's creating children's content for financial literacy. That to me is a huge value that should exist. And therefore, I am very much engaged in investing in this. They're creating content off of Stan Lee's last project. That to me has a huge amount of appeal. And the third reason is that the CEO, Andy, is actually known for creating businesses and selling them. So in my opinion, that is an additional opportunity for the stock to create value for me when it gets acquired. I don't think that's going to happen anytime soon because they're still in the stage of creating value. There's not enough value to be sold yet. But I think that that will come later. When I advise people on investment strategies, especially on penny stocks, I tell them that there is very, very low consistency because that is the nature of their business. They are all essentially in the startup mode, looking to reach the next stage. We have an opportunity to invest into them so that they can reach the next stage and create this mutual benefit so that you can make money as well, right? But you have to take into consideration that even the most successful venture firms have a 30% success rate. That means they're expecting 70% of the time to fail. And also you have to take into consideration that they're not trying to make money overnight here. You're investing into a business opportunity. And yes, you can trade on the indicators and whatnot, but this is not the 11ish way of investing. So I'm sorry, but I can't help you there. But outside of that, if you're looking to make money in the next week or months, this is not the investment opportunity for you. If you're looking for a guarantee, this is definitely not that. If you're looking for a guarantee, I recommend that you play the blue chips. And you should play the compound game. Compounding your gains, playing off of the earnings. That's how I've made a lot of my money. But if you're playing penny stocks, you have to look at it in a way where you need to hold the stock for a while. You have to look at it in a way where you have to believe in the leadership team, the direction and the roadmap and the products that are building in order for you to invest in it, in order for that to make sense. Unless you're very lucky, which is not investing, that's gambling, you're not going to be consistently making money off of penny stocks. You're much better off making money off of established companies that have proven track records. All right, everyone, I think I went on a little bit of a ramble, but I hope this video made sense. If you have any questions or concerns or thoughts around the GNUS brand, I'd love to hear from you. Please leave a comment. And also, if you have any requests for other stocks to look at, please hit that subscribe button and then leave me a comment as well. I will definitely get back to you. Thanks for watching, and I look forward to working with you next time.